Hello and welcome everyone to today's session. My name is Mohammed Shanti and I will be your host with the US Market Open. I'm a market analyst at FX Beza Group and I will be talking about the US market opening and what happened during the session and what's coming in the coming sessions ahead. So let's get started. Starting with the main, just before we start, we need to highlight the main points that everyone should focus on is that as a risk disclaimer, basically whatever information that we provide here in this live session is basically is only for educational purposes and nothing for basically for trading information. Basically, this is only for educational, helping you to decide your own decision on your investment decision. Basically, we don't give recommendations, but rather more information, insightful information, so that it can help you in making your trading decision. So what happened in the markets today? The inflation numbers in the Eurozone hit the 8.1%, which is a new record high, but fears about growth looms as the EU is close to unveiling a ban on the Russian oil. This is really important news because the Russian oil is almost banned. Russian oil is almost banned, as European leaders reached an agreement to cut around 90% of the oil coming from Russia by the end of the year. So the aim here is to deal another blow to the heavily sanctioned economy and diminish the Putin's ability to wage war. Although this decision will also inflict collateral damage back on Europe by pushing energy prices even higher. Now the oil market is already experiencing they are already exceptionally tight, even though we are seeing some highs especially with inventories being drawn down to meet demand. As the logic here says that since summer is coming, these summer travels are ramping up, and also restricting supplies any further leaves only for the prices to go higher. So consumers are already feeling that the heat from surging oil prices, and the rally isn't slowing down despite lockdowns in China and the turmoil on the stock market. So this is regarding the Eurozone and the ban that hitting the oil. Going to the US dollar. So the US dollar kind of started today's session with a small sluggish bearish side and then returned back. It's bounced back. So the US dollar has rebounded as short covering and bargain hunters have propped up the greenback. Yesterday, the US dollar index fell to 5-week low. This is one of the reasons why we saw a lot of indices going higher, stocks going higher, also gold, metals in general. WTI and Brent crude has increased as the EU is getting closer to finalizing its planned embargo on Russian oil. Lastly, equity markets are in the red as yesterday's bullish sentiment has almost faded. I don't want to say a bullish, like bearish, very bearish sentiment, but rather, let's say the rally has stopped. All right. So just before going to the MT4 trading platform, I'm talking about the technical setup for each product from a technical perspective. So we need to talk about the euro and how the oil embargo can affect it. So the fact that this kind of news is being disliked by the Europeans, as the logic here is that higher oil prices will burn a bigger role in the Eurozone's terms of trade, leaving deeper scars on consumers and might actually push inflation higher and higher. So the recent data releases shows that if you look at it from the French economy, the French economy contracted in quarter one, while in Germany, the inflation rate hit another multi-decade high. Also, the 8.1 recent data inflation numbers going higher. This is not really good for the European nations. So basically, investors are split on how hard the ECB will tackle this kind of inflation in July. So a 0.25 percentage point rate increase is currently fully priced in. So this is one of the reasons why the euro dollar is going higher, bearing in mind that the dollar went down yesterday. So we saw a little bit bullish momentum on the euro dollar. So money markets have already priced in this kind of news. And there's an implied chance of around 35% for a bigger half point move. So the upcoming inflation, so the latest inflation stats could settle how, like, could actually force the ECB to push even more interest rates. Now, how can that help us in trading, especially the euro dollar? So before going to the euro dollar, before going to the oil in particular, this is the trading platform. So we'll start with the euro dollar. So currently the euro dollar is standing at 1.0698, currently in a bullish trend direction. Both indicators are pointing to the upside, but the MACD is currently in the positive territory, even though we saw a bearish crossover to the downside, but still in the positive territory. Prices are within the moving averages, which this could indicate that the bulls are in control. However, we are standing at a critical support level for the euro dollar. So let's make a line over here so people can see. So the first level that all bulls must contain or must maintain is the 1.0670. So a defeat of this level, we could see prices go lower and lower. However, this is a really important support and expectation. If prices maintain this level, we could see prices all the way to the levels of the recent highs of 1 second. So to the area of almost 1.0780. So this is the main level that the bulls must defeat in order to see a continuation to the upside, especially if they want to reach the level over here, which is the main target for the bulls. So the 1.0992 in the coming on the coming week. So basically, this is from a bullish. This is the point of view of the bullish traders. They want this level not to be defeated. However, if we saw prices defeat this area, we could see a further momentum to the downside. This could be the triggering point for the euro dollar sellers. So basically, a defeat of this level, we could see prices all the way to the levels of 1.0544, which is the recent lows, almost from late May, which is at the 23rd of May. So this area is very crucial for traders. So basically, two main levels that you must watch, which are the 1.0670 and the 1.0790. So this area is very, very, very important. So this is for the euro dollar. If we go to the oil prices, so this is on the 4-hour chart. You can see prices are currently standing at 117.25 per barrel, which is near the latest yearly highs, which are at the 126.78. So as you can see, we saw major tops happening. A bullish setup is currently forming. We're seeing the MACD is pointing to the upside. Also, the RSI is still not near, I don't want to say not near, but rather very close to the overbought territory, but still not there yet. This is on the daily basis. So basically, we could expect more continuation to the upside. That means the main targets for the bulls could be this area over here, which is the 125, 126 area. So there is almost $10 momentum to the upside could happen. So from the downside, stop losses could happen just below the 104. So it's almost 1-to-1. So this is the important level. Why? Because it represents the moving average over here. Plus, it's very close to the trend line over here represented in the latest daily sessions. So if you look at it from at a lower time frame, which is the 4-hour chart, you can tell that this level have been previously tested several times. So this area over here, you can see whenever prices reach this area, we saw some momentum happening. So you can see how many candles actually retraced back from this level. So this area is very crucial for the bears in particular. So if they saw this level got defeated, we could see prices go back again to the daily range. The daily range from this area, which is from almost 93 to the 104. So this is the daily range, and currently we are outside that range because there is a resistance level got defeated, which is exactly here. So this is the resistance level a lot of traders used as a triggering point for their buys, so which is at the 112. And since then, we saw prices go all the way higher and higher, and now are literally trying to reach the yearly highs at 126. So at a defeat of that level, let's say near the 120, the psychological level, we could see prices all the way to the daily highs, the recent daily highs over here. So keep that on mind. If we saw prices all the way down to the just below the 104, we could see prices all the way back again to the 94, which would play a major level for traders in particular, because a lot of traders wait for the dip to enter this market. So we could see prices all the way. If it failed to reach the highs, we could see prices go back again within the range. However, if prices went back lower, this could trigger buyers to enter those markets. So it really depends whether prices stabilize above this support line or if actually stabilize above this resistance line. So it's very crucial for a lot of traders. So currently the range bound traders are waiting for this to fail, right? So they wait for prices to go just below the 112. They could make a sell, aim for the 104, or even lower to the 100, and then get out and wait for this support line to play its role. If that didn't happen, buyers could actually wait for one more day to wait for prices to close or stabilize above this high over here, which is the 115. If it's stabilized above that, that could trigger them to aim higher for a continuation. So it really depends on you, trader, whether if you believe that prices could retrace back again within the range, or it could continue its bullish momentum or this bullish trend line over here. So that's on you. Let's go to the since we're talking about the commodities, let's go to gold prices. So let's go to the 4-hour chart. Now, if you look at the 4-hour chart, you can tell that the prices are range bound. This is due to two things. Basically, because of the strong US dollar, but the sluggish movement that happened yesterday, the bearish movement that happened in the US dollar actually pushed prices higher. But then, since the dollar went back again and rebounded, we saw the prices are banding. So currently the XAU USD is controlled by the dollar, not because of the gold strong performance for in particular. So gold currently is affected by the fears of the Russian war against Ukraine, also because affected also by the interest rates decisions happening from across the globe. A lot of central banks are pushing higher their interest rates, which is bad for gold, and this is why we are seeing two conflicting positions against the US dollar. So war helps gold to go higher, while central banks pushing interest rate higher may force gold to go down. So that's why we're seeing almost range bound trading. So what should we do as a trader? Basically, there was a really bearish downtrend happening, okay? And this bearish downtrend has finished officially because of this this new, let's say, range trading area. So let's put some numbers over here. So if prices were able to defeat the 1870 and the next the 1877, let's say, all right, prices could go all the way here to the 1900 and then 1911. Is that the main favorite things, or is this the favorite scenario? I doubt that. I believe that prices could go lower because central banks are literally pushing interest rates higher, which plays a really big role on favoring riskier assets compared to the safe haven gold. So I would assume prices could reach this area and then go back again. So I'm more biased to the downside. So from the downside, the 1841 is a crucial area for bearish traders. So if we saw prices defeat this level and stabilize, we could see prices all the way back within this within this trend line again. So at the moment, you can see the MACD is very close to the zero area, and also the RSI is zigzagging, but still near the 50 area, which indicates that we're still in a range-bound trading. So I would rather wait for the 4-hour charts. Now, some traders love to trade for $3, $2 maximum. That's why we go to a lower time frame. So we could go all the way to the 30-minute chart. Now, how do we look at things? Basically, it's very simple. So whenever prices go above the moving average, that's an indication for us to enter the market as bullish. Yeah. Whenever prices close below and stabilize below the moving average, it's an indication for us to enter a sell market. So if you look at it from here, so we saw prices and we saw a bullish trade over here confirmed by the MACD, and also if you look over here, we saw prices go below the moving average over here. That indicates prices could go lower. Now it's happening again, but still this area is very crucial. So what we can do is that we could wait for prices to go as low as the 1843, wait for a rebound to happen. Once the rebound happens, you must see the prices go above moving average to enter and aim to the 1856. So it could give you $6 or $5 in your trades. This is for gold trading. Let's go to the euro dollar. Now the euro dollar is literally in, basically it's kind of saying it, we explained, sorry, the euro dollar. Let's go to the pound dollar. So the pound dollar is almost similar to the euro. However, inflation numbers from the euro made it a little bit tougher for traders. That's why it's much easier to trade now the pound compared to the euro, because it's a bit more clearer. So from a technical perspective, I know there is a trend line, a small trend line got breached over here, but that doesn't mean anything. So we need prices to go as low as 1.25 mark, and a defeat of this level could trigger sellers to trade in the downside. So this area is very crucial, over here. So this area is the main levels, that the pivot point that we need to watch for. So as long as prices remain within this range, just above the 25 mark, that means prices are in a range bound trading. What do we do from the top side? We need this resistance level to be defeated. So this level is very crucial. So a defeat of this level, which is the 1.2660, is the main level from the top side to see a continuation to the upside. So the RSI, there's a conflicting performance from both the indicators, which indicates there is a range trading. MACD is currently in a bearish setup reversal, but still above the positive, above the zero line, which indicates that the bulls are in control, but not that strong. Also, the RSI is literally bounced back again up a little bit here. As you can see, there is a point to the upside, which could indicate that maybe prices will continue its range bounding, but still there is a bearish side to it. So that's why I would rather wait for any trade on the euro dollar, because currently the currencies are trading heavily, especially because of the high volatility coming from the war, from the China lockdowns, from the Russian embargo, the European embargo on the Russian oil, and so on. So all these fundamental issues are actually affecting currencies, and that's why we're seeing a lot of volatility. However, we're seeing a lot of trend trading. So I would rather to avoid range trading on currencies, but rather aim for trend trading. So that's why I would rather wait for a defeat of this level, 1.2660, to aim for further momentum to the upside, or wait for this level to be defeated, which is a 1.25 mark, and to enter a bearish trade. So it's up to you, trader, to decide how you want to approach the currencies. Now let's talk lastly about the Dow Jones and stocks market and in general. So in yesterday's session, we can tell like a lot of traders are literally after the Memorial Day, after the holidays that happened, there were a lot of information, CPI inflation numbers. We have the expectation from the Fed that they might not go as hard as they were expecting. Maybe they will slow down a little bit with their interest rate policies. They are literally aiming to push interest rate higher and higher to tackle inflation. However, that could lead for a recession if they mishandle it properly. So there are some confusing thoughts between investors on how to enter the stocks market. So from from the valuation perspective, so the valuation have compressed, but that doesn't mean that the pain is over the next 2 weeks. So corporate earnings will be very important. We have also a lot of we have Amazon stock split, which could give us a really good view how confident the management are with their stock split. So there are major things happening coming in the coming month. So bear in mind that stocks could be volatile in the next sessions, especially we have the non-farm payroll coming this week. So a really good non-farm payroll numbers could boost the indices higher and higher. Bad numbers could really reflect badly on the indices. So let's talk from a technical perspective. So from a technical perspective, you can tell that the bear slide that happened over here on the daily basis has finished, and we are seeing a lot of like last week we saw a bounce back to the upside, and it wasn't just a normal retracement happening, but rather maybe a new uptrend could be upon traders. So in today's trade, we can tell that there is a bearish momentum happening. This is the daily candle. However, if you look at it from the 4-hour charts, this is normal retracement for the latest uptrend that happened. So this could indicate maybe some profit taking happening on indices, waiting for further information, maybe traders waiting for the non-farm payroll report. So this could mean that prices could literally stay within this range, within the 32,700 or even the 33 mark, okay, 33,000 mark. And some traders would rather wait for a dip to enter this market. So we are seeing a high happening and then a low, maybe another new high. This new high could be here. So it could be this area. So a confirmation for a trend to the upside is when prices continue its bullish momentum and defeat the 34,000 mark. So this is on the long-term view, this medium view. If you look at the 1-hour chart, now this when the candles are literally trading below moving averages after a huge momentum to the upside, that indicates as an exit for us to get out of this market. So basically, any trader who entered this area from this area could leave here. So if he left here, some traders would wait for confirmation. So what do? We wait for prices to either stabilize above this level, which is exactly, let's put it exactly 32,550, somewhere around this here. If we saw prices defeat this level, we could see the next level is this, the 31,789. However, if prices tested this area and then bounced up, that's a clear indication to enter this market. Now, look at the RSI and look at the MACD. Both of them, the MACD is currently telling us bearish momentum happening. However, the RSI, we saw this bearish momentum after the overbought. Now, prices are going back again to the 50 area. So there is pointing to the upside. So if today's session closed higher, just above the moving average over here, 33, 115, 111, maybe prices could continue higher. So wait for it to happen. So that could be your entry point. So please be aware that we have a huge support line over here, which is the 32,500. From the top side, the first resistance level that must be defeated, which is 33,450. So this area over here, this level is crucial for the first confirmation. Secondly, we need prices to go all the way to the 34,050 to confirm the bullish trend. All right. So if prices went below and stabilize below this area, that means we could see a continuation to the downside. If prices retraced back from this area in the coming sessions, prices must go all the way above this as your initial support resistance level, and next the 33,460. So these two levels are very, very crucial. I want to say thank you so much for joining us in today's session. Please stay tuned for further videos coming this week and also on a daily basis. Thank you so much for joining, and please subscribe and hit the button. Thank you so much.